morning guys, George Robinson here from TeamNinjaz. In this video we're going to cover the Signal Forge risk settings. We've been getting a lot of questions from a lot of people in regards to this, so we thought we would try and put together a short little video that will hopefully cover all of this in one go and make it easier for people to understand. What we're going to cover in this video is how much to fund your account with, how much to risk per trade, which systems do I turn on and off. Within this program there's like 10 different systems that comes with Signal Forge. What Hawkeye risk settings should I use, my daily stop loss amount, maximum losing trades per day, maximum open trades, minimum percent payout, and can I change these settings up and down, and then we'll look at some troubleshooting. Now before we get started, everything we're going to cover here is just suggestions and education based. I'm not a financial advisor and I'm certainly not your financial advisor. The objective of this video is just to make you or help you understand how it all works better, so then you can make a more informed decision yourself, but at the end of the day it has to be your decision. Okay, so with that we'll get straight in. How much to fund your account with. Now this one really ties in with the second one as well. How much to risk per trade. These two go sort of hand in foot. So if we look at this Excel document here, we've got different account size examples. Now whatever you do, it's only risk capital. Risk capital is not something that you need to pay the rent with. It's not something that you need to feed your kids with. It's not to pay the electricity. Risk capital is over on top of that income, okay? Something that you're going to hopefully put aside a little bit each week or month or whatever that you're using to build up some sort of long-term wealth out of it. That's where risk capital is. And for your trading account, what you're going to risk per trade should only be around 1 to 2% of that account size. So if you've got, in the way of risk capital, say you've got $500 to put into your account, to your trading account, to risk 1% of that would be $5 risk per trade. Okay, so it's not a lot. 2%, it would be $10 per trade. Now the given rule in trading throughout the world is 1 to 2%. When we did a lot of trading in the past, we were around 2%, and as our accounts got larger we were down to 1%. And when we were managing funds for other people, it was definitely down around the 1%. And I mean, it gets, as you add more systems in, you can have multiple trades open at a certain time. So if you're risking say 2% per trade, so you're risking $10 of your account, but say you've got 10 trades open at once, well now you've got $100 at risk at that time, which is, in this case, on a $500 account, you now got 20% of your account at risk at a particular time. So I mean, it adds up. So if you come down to something like 5% in this example, you are $25 a trade, but if you have 10 trades open at once, you're now risking $250, which is 50% of your trading account size. Okay, so do what you think is best given your own circumstances, but the given rule in the industry is around 1 to 2%. So as for account trading size, anywhere from $300 you could go down to as a starting point. $6 a trade type of thing to get started and slowly grow from there, up to whatever you have available at the time. You can trade, you can risk per trade. It is capped within the system of anywhere between $5 and $100, but I think they may have reduced it to $70 per trade now. So if you risked, for example, if you had $5,000 account, 2% of that is your $100 risk. So account size somewhere between here and here, depending on what your own financial situation is around, but whatever you fund it with, try and stick to this 1 to 2% risk rule per trade. Okay, you can go higher, some people are, and they are doing okay, but if things go against you, then it turns pretty ugly pretty quickly, so be aware of that. Again, 1 to 2% is recommended. So that's number 1 and 2. Now, which systems do I turn on? If we have a look at our account here, so this is members.signal-solutions. This is the program running. It's normally running on our VPS, but it's the weekend at the moment, so I'm shooting this video on here on my local PC. So first up, we'll just have a quick look at this screen here so you understand what they're trying to display, the information they're displaying here. Here is the systems here. We've got signal number, so this will show you the statistics from the previous week. So it'll give you the signal name, merge, pure, rush, hammer. It'll give you the direction that the trades were taken, short or long or up and down. The expiry, so how long the trade was for, 5 minutes, 30 minutes, end of hour. Majority of them you'll find are between 5 minutes and 60 minutes. Time, this was how long ago the trade was placed. The underlying asset, so we're trading binary options, but it's based off a underlying asset. So this is the euro pound, this is the pound Australian dollar, the Australian US, and the euro pound. And down the bottom here we've got pound and yen. So up the top here we've got algorithmic signals, and down the bottom we've got live trader signals. So algorithmic signals are computer programs. Basically these people have written code on a computer program, a different computer language, be it CNET, C++, whatever it is, and then it's 100% hands off. So they do all their testing based on previous market data. They walk forward, break it down, test, run it on different asset classes. And then once they're happy with it, the computer program is finished effectively, and it just runs on a computer, and then the market data feed comes in, and given whatever that does, if the price moves up and down on a certain amount, well then it will either place a trade or it won't, but all of that's done hands off. Once it's been written, there's no human interaction with it, and we just copy those trades. Down the bottom here we've got live trader signals. Now these are actually physically people sitting behind a desk being boring, basically watching the computer 24/7, and as they're placing the trades we are copycatting those trades. Now these guys have still got systems in place. They're not just placing a trade randomly because they feel it's a good thing to do at the time. They have some sort of system that they have worked out, again done a lot of research with, but they might be adding some sort of fundamental element to it, perhaps, that the overall consensus from the FOMC meeting or some government thing that's happened around the world puts them in a long bias on this currency asset, so they'll only take trades in that direction based on that. So there's a few other things that they're putting into play there, and therefore they are placing the trades manually. Again, we just copy those trades. So that's the two different systems there, two different system types. There's 6 under algorithmic and 4 under live trader signals, I believe. Next one over here we've got the price. So this is the price that the trade was taken at, the in the money line effectively. So on this trade here, merge was short. So if the price is lower than that at the time of expiry and 30 minutes after we placed the trade, that would have been in the money and it would have been a win, but obviously the price was not. It would have been higher than that, hence it was a loss in this particular scenario. Manual, so this is the indicative outcome if the trade was taken manually based on under API entry and exit price. Over here is the auto trading. So the outcome was taken by the instant replication mode on extreme risk, which we'll come to in a minute, through binary.com. You'll see sometimes there's a discrepancy here between the manual and the auto, but overall they should be pretty similar. And then you can click on here and see the view the chart of that particular trade. Now back to which systems you should turn on or off. You can come up here to analytics, click on this button here, and it will open up a page where you can see a whole lot of analytics on the different systems. So this particular system we're looking at is Hammer, and this gives you an overview of how this program has run since its inception, since they started testing it and trading it. So you can see since the 1st of June 2015 it's got a 72% accuracy rate, and it's had 1,239 trades. Then we've got this month, this week, and today. Now this accuracy rate is pretty important, and we'll come down to that soon, but really it needs to be above sort of 56% for the system to be profitable. So you can see time-wise, then down here by currency pair that it's trading, so slightly different results based on the currency pair. whether that's random or whether that's something that's going to continue on, is something that only time will tell. But there's a few trades in there, enough to give a reasonable indication of what's going on. And then we've got the time period that this particular system was taking the trades. So if you wanted to be really crazy about it, you would turn this particular system off between midnight and 1 p.m. No, between midday and 1 p.m. because it's sort of borderline. You're not really going to make much money there, given what's happened in the past. But again, what's happened in the past doesn't mean to say it's necessarily going to happen in the future. So on there, if you want to drill down further, click on this Advanced tab, and it will show you the same results effectively, but you can specify which date you're looking for. So if you just want to see this month, or say from the 6th to the 23rd of September, click on search. It'll show you the results just based on that given parameter there, and obviously for this hammer system that we're looking at. Okay. The next one we've got here is charts. Click on that, and you'll see the in the money. Again, ITM stands for in the money. That's basically when it was, how often it's profitable. If it's in the money, it's profitable. So you can see in here number of signals, so 1825, and it's averaged 71.1% of the time to be in the money. So it's been profitable 71% of the time, basically, is what that means. If it's in the money, it's a profitable trade. Okay. And you can sort of shift down here and zoom in on different areas that you want to look at. Rankings. So this shows today's date. There's no trading today because it's the weekend, but if we look at this week, you can see the 10 different systems. So again, we've got 6 here algorithmic signals and 4 down here live trader signals. So for this week, we can see that Purge has done particularly well. It's got 6 signals and it was 100% accurate. Every trade that fired was accurate, was positive. Rush, 93% accurate. Hammer, 83%. Down here to Pure was 50%. So again, anything below around 56% you'll find will not be profitable. So, and we'll cover that in a minute. So this system here was not profitable for the week, Pure. And then down here on the manual trades, these two are good, and this one down here wouldn't have been profitable for the week. Obviously overall, you would have been fine though. So as for what system to turn on, well, you would have been better off to have this system turned off for this week, and Flux turned off and Pure turned off this week. But if you look at it monthly, you can see that Flux is borderline. Smooth was not profitable in the month, but Pure has been done very well. So just because it was not so good that last week doesn't mean to say that it's not going to be good overall, or throughout the next couple of weeks. And then of course you can go back and look since the start of time. So based on the information that you can see looking through all this, you can get an idea of what systems you want to turn on. Personally, what do? We have every system turned on, because all of the systems have got good fundamental reasoning behind them. The trade evaluation, if you click on here, it actually tells you a little bit about, so it uses the wave theory to find reversal points in the market. Each one of these will tell you a little bit about the system. So they've all got good fundamental reasons behind them, and we understand that trading is a long-term thing, and you're not going to make money every day or every week, but overall, over time, if you've got an edge, you can exploit it, and you should do all right. And that's one of the advantages we have with this system, is that we've got 10 different trading systems in here. So if one has an off week, the other 9 might be okay, or if a couple of them are having an off week, overall the others will make up for it, and it gives you sort of a portfolio effect, which should help to smooth out your equity curve. So hence we have every system turned on. But going forward, if we see a system that's consistently losing month over month, well, then we will certainly look at dropping that. But again, that's just our personal thoughts. You do what you see as fit. So next up, what Hawkeye settings should I use? Again, if we look into our system here, now if you come under Forge here, open that window, So on here you can see it's got the Hawkeye risk engine template here sitting at quick fire. There's a few to choose from in here. You got self-adjusting, slow and steady, balanced, and quick fire. So what that effectively does is it will turn some of these systems on and off, and it will change the risk engine settings. So over here again, we were talking before about which systems to turn on or off. This is where you would turn them on or off. So you can manually select any trades that you want to trade or not trade based on that. Okay. But the Hawkeye risk engine that we're talking about here, it gives you an option anywhere between extreme risk all the way down to no risk. I have no idea how you would have no risk unless you weren't trading, but whatever. So there's a range in here from extreme risk down to very little risk basically. And what that is doing effectively is this system hammer fires off a signal and it places a trade, but we've got a filter over top of that, the setting here, which can filter out some of the less likely trades. So if you've got it on extreme risk, you'll get every signal that hammer sends. If you've got it at very high risk, you will get most signals that hammer sends, but not all of them. Down to low risk, where you're going to get very few of the signals that hammer sends, but the ones that you do get will be more likely to be profitable. Okay, so that's the idea behind it. And to get an idea of what particular settings you want to use here, you can come over here to analytics, have a look on that, and select your signal. So if we want to look at hammer, and we put in a date, say we'll just look at September to date here. Now you can see here, so extreme risk, we've had 2 wins and we've had 7 losses. So it's only had a 22% accuracy rate on extreme risk. Over here at very high risk, you see the accuracy rate has come a little bit higher, and we've had 1 win and 3 losses, still not good. Down here to very high risk, it's the same effectively as high risk is the same as very high, but then you come down to risk and we've had 2 trades, but both of them have been profitable, so it's filtered out those unlikely trades. And medium risk, you've had just 1 trade, but it was still accurate. And I'm guessing the other ones down below this, the ones that were less than medium risk, there was no trades at all. If we look at, say, merge, click submit for the same time period, you can see, so we've had at extreme risk, we've had every trade, 6 trades, they were all winners. Very high risk, we've filtered out 2 trades, obviously still all profitable. There's only 4 trades this case. Down here there was still 4, here there was 3, 3, 3 and 3. So by having this one on low risk, you would have missed out on 3 winning trades in this particular case. So you can go through here and look at each particular system to get an idea, and get a particular idea on the Hawkeye risk setting that you want for that particular system. Okay, so back to the settings. Now as for these preset ones, so you preset it, say we want to look at self-adjusting, you'll find that's turned off some systems. It's only actually running 3 systems, and it's set them all 3 to extreme risk. To get an idea of how they've done, basically it's a portfolio of trades, because you're looking at 3 different systems here combined, which the analytics before, unless you manually combine them all. But if you look at under analytics here and infographics, the last tab in here, you will see we have some documents here with the results based on those preset systems. They started from August, so if we look, you've got weekly ones, but they've also got monthly ones. So the last full month was August, so we look at that. You can see the manual percent win rate, the volume of trades, the automatic win rate, based on these settings. So we've got the quick fire, balance, slow and steady, self-adjusting, and house settings. So it gives you here the amount of signals and the percent win rate based on those settings. So it's a combination of all those different systems that are running based on their risk settings, gives you this overall outcome. Profit multiple is a very important figure, very interesting figure to look at. Effectively, it is for every dollar risked, this is how much you would have made in profit. So if you risked $1, you would have made $27.86 through the month of August if you were running the quickfire template. So if you were risking, say, $10, it would be you would have made $278.60. If you were risking $100 a trade, you would have made $2,786 in total on that month. And this one here, obviously, if you're risking $100, it would have been $1,039 or 628. Okay. So the system that did the best down here was the house settings, which we don't know what they are, but it's their settings that they've custom made. But other than that, if you look at quickfire, basically did the best. You would have made $27.86 for every dollar risked. So back to what the quickfire setting is here. So quickfire has every system turned on, but these are the settings that they've got over here for the risk management on each system. If you change any of that, make sure you go back and put in your default transaction amount. Again, this can be any amount you want. This can be different per system, so you could be doing, $50 on hammer and $10 on merge if that's what you want to do. You just do it however you want to do it. Personally, we've got everyone set on 20 for our account. And as for risk settings, we are, again, personally, we're trading extremely risk on all of them, is what we have in our account. But we are expecting to have higher drawdowns than the majority of people, but overall still looking good. And what we've done in the past, what we've seen in the past over the last couple of months, we've done still pretty well, so we're happy with that. But I know some other people have been doing quickfire and other settings, and they have been doing pretty well as well. So again, that's up to you. Just have a look through the analytics in here and you'll see what the results have been based on these particular settings. Another thing in regards to your default transaction amount, you can set this anywhere between 5 and 100, or I believe it's now been reduced to 75, like we talked about in the first part of this video. But you see here it says if you're trying to go above 50, you cannot be more than 50. It comes with this red little warning here. To get that increased above 50 to either 75 or 100, I'm not sure what that is at the moment, you need to come up here to this liability waiver, click on that. It will take you to a page where you can download a document when this opens up here. So click here to download this document, sign it, and then upload it in here. And then once Signal Forge receive it, give them a couple of days to run through it, and then they will increase that limit for you. And then you can come back to here and change that transaction amount to whatever you want within that limit. The next part here is the daily stop loss amount. So in here, again, under your Forge setting here, so down the bottom here we've got daily stop loss amount. Now we've got this set for 2,000, so this would mean $2,000 we're risking. We could lose effectively $2,000 before the system would turn off for the day. So that's our maximum we could lose in a day. Now these numbers here are this 2,000 and this default transaction amount. This is whatever currency that you fund your brokerage account with. If you fund it with Australian dollars, this will be 20 Australian dollars. This will be 2,000 Australian dollars. If you fund it with US dollars, it would be 20 US dollars, and this would be 2,000 US dollars. Or if you did euros or pounds, again, this would be 20 pounds, and this would be 2,000 pounds. So keep that in mind too. It only comes into play when you fund your account though. But back to this 2,000 unit here. We don't want to lose $2,000 in a day, particularly on our account size. We're doing $20 a risk trades, so our account size is not really very big, and we certainly don't want to lose $2,000 in a day. But this setting below it, daily stop loss positions, so this is how many positions you can lose, how many trades you can lose in a day before it will turn off. So we've got that at 7. So our transaction amount is $20 a day, $20 a trade, so 7 times 2 is 14, so it's $140 effectively what we'll lose in a day before the system will turn off. So this setting here, daily stop loss amount, is overridden by this setting. Okay, And the reason that we do it this way is because you down the bottom here it says users with real money account shall use the daily stop loss amount and number of open position fields to set their limits on their trading activities. Once set, you can only tighten your limits, so use it cautiously. So if you set this to say you wanted to do 140, and because you know that's 7 trades, so it's effectively the same, but then after a while your account grows and you want to scale this up to say $30 our trade size, now you're going to be cutting yourself short because you're going to trip this out before you've lost 7 trades in a day. And if you take this up to say, you know, you get to the point where you're trading $100 account size, well, you can only lose 1 trade and then it's going to turn off, and that is severely going to impact your trading system. You know, you've got to let them move, you've got to let them have wins and losses, because that is trading. If you have it kick out because you had 2 losses right at the start of the day, well, you've missed out on the rest of the day's trading, and quite often it can be, you know, you can have a couple of losing trades, but then you could go on and make 10 profitable trades after that. So you are really changing the dynamics of the program by doing that. So try not to restrict it, you know, be comfortable with the fact that you are going to get losses. So what we do is we have that set high so that effectively it's out of play, it's not coming into play at all for us. And we control it here because this 7 losses per day is going to scale based on the size of this, so we can increase and decrease these trade amounts however we like. So if we're trading at $20, well, then it would be 140 for the loss for the day. If we turn this up to say $50 on each one of these, 7 5s are 35, so now we're risking $350 in a day potentially. If we take it up to $100, well, now it's a $700 that we could potentially lose in a day. And you know, it's all relative. You've got to, if you can't handle losing $700 in a day, well, you've got that too high. Bring that down to something that you are more comfortable with. But don't try and stop the system after it's had 1 loss or 2 losses, because you know you're going to severely impact your results. Okay, so we control it here because this is going to update dynamically as we scale or decrease our account size. Now the number of open positions, we've got it set to 5. So that's basically if you got 10 systems here and all of them could fire a trade, so you could have 10 open trades at once. Now if there's some sort of horrific event throughout the world that drastically affects a lot of the countries or the different currencies, you'll find a lot of them are tied to the US dollar, so they all generally, when there's a major event like that, they'll all move in tandem, all move together. So you could effectively get a whole lot of trades all at once, and then, you know, if you've got all those trades open, well, effectively all of those trades could lose. So you could have, you know, if you have that set at 10, you could get 10 losing trades, boom, just like that, all in one go. So we have it reduced to try and limit, help reduce the risk that we have at any one given time, you know. Again, you can set these to whatever you like. This is just what we have it set at. And you'll find that we don't miss out on many trades because of these settings. It's only on a freak event that would come in and kick into play. And saying that, you know, you've got your daily stop loss positions at 7. Say you've lost 6 trades in the day, and then all of a sudden the market moves bang and it fires off, say, 5 trades at once. Well, then you could end up, if they lose, you could end up losing more than that 7 in a day. But it's very, very unlikely, but you know, mathematically the potential is there. So keep that in mind too. So that's the number of open positions, that's the daily stop loss. Again, we're not worried about the daily stop loss amount, we're having that set high. Now if you have set these low and you need to increase them, you can, but what you've got to do is send an email into your brokerage firm saying, can you please increase my daily stop loss amount from whatever it is to whatever you want to increase it to, and put in your account number in there as well, and they will receive the email and they'll shoot you back saying, yes, we're going to do this and this by this date. It normally takes between 7 and 10 business days. and then you just confirm saying yes, I want you to do that, and then they'll adjust it for you in that time frame. So in the next 7 days or something, then they will adjust it. They'll send you an email saying that it has been done, and then you need to come in here and manually change them. Now if you don't change them when they tell you that it's been done in those 7 days time, and you carry on trading, it will reset it down to whatever amount, and then you have to go through that process again. So the point is, try and leave it high and make it so that you don't need to increase these, because it takes, as I say, 7 to 10 days, and that's pretty annoying for a lot of people. It's just a hassle. So have these higher, but control your risk by here. Set these to a small enough amount that it's not going to dramatically affect you if you have a few losing trades, because no matter how good the system is, you're always going to get losing trades, so you need to be able to handle that. Next on our list was, so we did maximum losing trades, we did maximum opening trades. Now the minimum payout percentage, so that's that next field down here, minimum payout, and we've got ours set at 50. So what that means, if we're risking $20 a trade, that means that we will take a trade that's only going to pay out $10. 50% of 20 is 10, so it will pay out $10. If the potential trade that we were taking was only going to pay out $9, this setting here would stop that trade from happening. Okay. Now, one good thing about binary options is before you place the trade, you know exactly what your potential profit will be, and you know what your risk will be, your potential maximum loss. So you know those parameters before you even initiate the trade. So you know what your potential profit will be. Now, some people will tell you that you should only risk your money if the payout's going to be worthy. So only risk your $20 if you're potentially going to make a decent amount, say 90. Well, you're not going to make 90 on it, because it's just never going to 90%, which would be $18. But the problem with that is the ones that are going to pay out higher amounts are generally less likely to be profitable. So if you're only taking trades that are going to pay out a high amount, the chances are those trades you're going to lose. And then the smaller ones that pay out less, you'll find will be more often, they will be in the money, they will be profitable trades. So it's, works both ways. As a general rule, we have it set down to 50, and means that we are not restricting any trades. So the lowest that we have seen so far, potential payout, has been 61%, and I'll show you that in a minute. So we have it set at 50, but again, do what you think is best. And the last one down here, state of active or inactive. Well, if you're trading, you want it on active. If we have a quick look at that minimum payout setting, so on here, if you look at, this is just one trade, we're looking at risking $100 per trade, just for round number figures. So if our potential payout was 80%, so we were looking before that we restricted it to, we're going to take anything above 50%. So if it was 80%, and the reason I've got 80 in here now is because if we look at our account here, this is all the data that we've had since the 28th of July when we started live trading this account. And all the trading signals that we've had on average. So if we look here, this is the profitable trades, what the percent return on the trade was. So down here, the maximum we had was a 92%. So for $10 we were risking, our potential payout was like $9.20. The minimum was 61%, so we risked $10 to potentially pay out $6.10. Again, we've got it set at 50, so it wouldn't have made any difference here because the smallest payout we had was actually 61%. And the average was 79% payout, okay, across all of those trades. And there's been 309 trades in this account. If we look at the losing trades, it's pretty similar, but the maximum was 95%, so like I was saying before, you're more likely to the higher payout is a higher risk, and you're less likely to get that to be profitable. Hence the maximum was slightly higher on these losing trades, and the average again was slightly higher. It's not actually too much higher, surprised, it's only 81%. But overall, on average, they've paid out 80%. So for every trade you're taking, you're potentially getting a 80% return on that trade. So back to here, that's why we've got that set at 80%. Now obviously if it was 100%, so for every dollar we were risking, our potential payout was $1, let's say, well then this accuracy rate would only need to be anything above 50, and you'll see you'll be profitable. If you're below 50%, you're going to be in the red. Okay, but if you drop this, because our payout is not 1 for 1, it's not 100%, it's only on average, it's averaged us at 80%. So if the system is only accurate 50% of the time, so for every one you win, you lose a trade, you would end up losing money, because the potential payout when you win a trade is less than what you're going to lose when you lose a trade. Okay. But so to get that to the break-even point, you need around 56% is what it's been on average so far. So anything above 56% in the money rate, when you're looking at those graphs, anything above 56% would have been profitable. So 66%, good, 72, 83, all of these. This one down here is right borderline, 57%. But anything above there, in general, would have been profitable. So if we take that up to around, well actually, looking at that account, you can see it has averaged 65.05% winning trades accuracy. So basically we've been around there, and which makes it quite profitable over time. I mean, this is given on one trade, but so hopefully that makes sense. So again, back to that setting, we've got it set at 50 because we want to take every trade, but the smallest that the brokerage firm has paid out has been 61% in actual fact, and it's averaged around 80% payout over the last 2 months in our trading account. So that's the minimum payout. Now, can I change these settings up and down? We covered that as well. You can't, and you shouldn't. Also, back to scaling your account size. We've got people that are changing their figures, their daily or their default transaction amount. They're changing this like sometimes throughout the day or just at the end of the day. You got to be careful with this, because like if you say, for example, you lose 2 trades, or say you win 2 trades at $20, and say the payout is 50%, so you would make $10 on 2 trades, so you'd make $20, and then you increase your trade size and say you double it, 40, because you know you made a little bit of money. Now you lose 2 trades, well now you've just lost $80 when you only made 20 before. So you've won 2 and lost 2, but you are in the hole by $60. Yeah, so you need to be careful with that. As a general rule, I suggest, again, it's only suggestions, I suggest that any settings you do in here, be it extreme risk, you know, your Hawkeye's risk engines, whether turning systems on or off, or even your default transaction amount and the stuff down here, set it for the month, do your research, set it for the month and leave it alone. Then at the next month, look at where your account is, do some more research and see if you want to change anything, and see if you want to scale your account up at that stage. So looking here, so we've got month 1, say you start off at $5, say you're risking 2%, so you're risking $10 per trade, that's what you've got it set at. Then come month 2, now your account is, I don't know, say $800. So again, at your 2% risk, you will increase your trade size to $16, and you'll continue to scale up. So the next month, see where you're at, and increase it again. But I'd suggest you to do it monthly. Some people are doing it weekly and it's doing fine for them. Some people are doing it daily and it's not doing fine for them. But again, this is what I would suggest for you to do. So the last one on here is troubleshooting. Obviously we get, when people initially set up their account, they can run into a few problems. So what you need to look at, first up, is this forge status. So if this is green, that generally means that things are okay. Make sure it's active. Like if you're running on a VPS, sometimes it can freeze, so make sure it's active. If you're not seeing anything move, try refreshing the screen to come back up. Make sure that this program, members.signalforgesolutions.com, is only logged in with your login details on one browser anywhere in the world. If you've got it logged in on your phone, don't log it in anywhere else. If you've got it logged in on your VPS, don't log it in on your local computer. Don't have it open on two browsers on the same computer. I don't know why you would, but just don't do it. Oops. This can only be logged in with your account details on one browser, anywhere at a time, okay? So generally what we have it doing is we have it running on the VPS, and it solely runs on the VPS, that's all. If you have it on your VPS and on your local PC, it won't work, okay? So very important there. Another thing, the next thing is really your API connection. If you look under Forge, when you're setting up your account, this binary token, when you type it in, you'll or paste it from your brokerage account, you'll click over here somewhere and it will spin round and it should verify. So it says it's a valid API token. Make sure that it does that, but also, you know, make sure that you've copied it. Don't try typing it in from your brokerage account. So if we look at this particular account, look at our API token. So here you would copy it, copy and paste it in there. Don't try and type it because you can get, you know, it's hard to see some of these, and the capitalization and that is all important. Make sure that the scopes are all done. So read, trade, payments and admin, which means when we created this token we ticked every box and wrote in the name. Okay, make sure all of them are correct. So make sure that lines up with what is in here. Obviously this needs to be set to auto because you are auto trading. Down here, if you try to change anything here, you click save like you need to, but it won't save. It says that there's an error connecting. That generally means that you've got one of these settings set higher. So if I try to change that to say 3000 now, and then I come down here to save, what it will do, I presume I can replicate this. Binary responded with an error. Please try again later. Okay, so that means that you're trying to increase this number, and you can't do that like we've already explained. You need to send them an email to get them to do that. Now how you can check to see what that number is, because if you've forgotten, you can come to your binary, your brokerage account, come in here to security and limits, and look at self-exclusions. So in here it'll show you what your limits are, which have transferred from your Signal Forge account through to your brokerage account. So the daily loss on minutes is 2000, so I can't, that is my limit. That's hard. I can try changing it in here, but it won't let me either. I've got to, as it says here, contact customer support, okay, to increase it. And you see the number of open positions again, that's set in here as well. So if you're seeing that error, that's, you can go in there and check. Whoops. You can go into your brokerage account and check what that setting was. And if you do need to increase it, well then obviously you need to contact customer support, as it says, and get them to increase it. Another thing, when you select these from extreme risk, you will find, so if you had it at medium risk, you know, you are going to get a lot less trades. As you will notice, if you look in the analytics like we covered before, you're going to get less often, you're going to get less trades because more trades have been filtered out. But to test that and to troubleshoot a lot of the other part of it, if you come over here to transactions, type in a date, So whatever date you're trying to look at, you can select by success or failed. Just leave it on all signal streams, click submit, and you'll see over here that the replication status success. If I take that back to say the 1st of September, down here, you can see there's a failed one. So it was the euro US dollar, the system was blast, that's the information on the trade, but it failed. Why did it fail? Well, if we click on view log, it will tell us. It tells you that it was initiating the transaction. So this is the API talking to the brokerage firm, and as it runs through its protocol, trying to establish connection opened, receiving the price feed data, price levels met, replicating, API error, buy open position limit. Sorry, you cannot hold more than 5 contracts at a given time. So because we've got that set to 5, you can see this here filtered it out. So this must have been the 6th trade that was going to be opened at the same time, so it stopped us because of our settings. If we look at the one before it, probably the same deal. Yep, same deal there. But you will quite often you'll see this will say something to do with risk settings, which will be the fact that you haven't got it at extreme risk, you might have it at medium risk or something. But in general, number 6 is where you'll see what the problem was with that trade, why it didn't go through to your brokerage firm. Sometimes the underlying asset is not available through the brokerage firm, so it won't take the trade there. Got another page, see if we've got more. We can show you. This one here failed, and this is the pound against the Swiss franc, so I think that's a currency that they didn't have. No, it's a position limit. So the rest of them were all successfully traded with us. So that's pretty much your troubleshooting steps. And of course, if you have any other problems that you can't work out, let us know in the Skype group and the Facebook group, and we will help you out. So that's about it. But remember, your funding and your how much to risk per trade. Look at you see in our account here. So this is the account that we started. This is our small account. We're just risking $20 per trade. We're not scaling it up. We're going to keep it at $20, and we're not changing any settings. We've got this at extreme risk, all systems turned on, and running at $20 risk. And it gives you an idea of how the whole systems have been working. So you can see we did have a drawdown here. We made some money to start off with, then we lost some, made a little bit, lost some, so we still haven't got back to our equity high. So equity high there on like the 2nd of August, down to our equity low the 9th of August. We had a $184 drawdown. See, the formatting's not right, that should be red and in dollars, but anyway, it's $184 that we drawed down. So if we had had an account size of only $200, we would have not been able to take any more trades, because we're risking $20 a trade and we wouldn't have $20 left in our account if you had have started right on that equity high, which it does happen. So make sure you can handle those drawdowns, and this so we've got the profit multiple down here. We talked about that before. So for every dollar risked, we have made $50 in here. So if we had been risking $10 a trade, we would have made $507. We're risking $20, so we've made $1,014. If we were risking $100 a trade, we would have made $5,071 in this account over this time frame, 57 days. It's all relative, and the maximum drawdown is relative too. So the drawdown multiple here, $9 or 9.18, is the same. If we were risking $10 a trade, well then that would have been $91.80 that we would have drawn down here. We're risking $20, so that's why it's $184. But if we were risking $100, well, this drawdown would have been $918, nearly $1,000 in drawdown. So don't cry about that. That's part of it. You've got to be able to handle that. You're going to make more money in the profitable trades, but you're also going to have more in the when you lose money. There's going to be bigger swings. So make sure you've got your trade risk. It's something you are comfortable at risking, hence we suggest the 1 to 2%. if you go higher, just make sure you can, appreciate what's going to happen potentially. I mean, that's the biggest drawdown we've had to date. I'm sure there's going to be a bigger one in the future. It's just part and parcel of trading, What you'll find is people underfund their account. They go into a drawdown and then they bail out because either they've got no money left in their account or they're just too nervous to go on. And then the system will go on to make some money and get up to like an equity high, and then they'll fund their account or they'll turn it back on and they'll start losing money again, and then they will turn it off. But overall, the system can be profitable, but you've just got to be able to trade responsibly. So anyway, I hope that helps. If you've got any further questions, please ask in the Facebook group. There's a lot of pretty switched on people in there that are always available to help. So thank you, and enjoy the rest of your day. Cheers.